Good afternoon, everybody. Today I'm chatting with Jordan Trimble from Skyharbour Resources. In this interview, we discuss the uranium market. We also get into how equity typically flows into uranium equities during a uranium cycle. I find Skyharbour to be a very interesting company because they are a prospect generator and they're also developing their own flagship properties. Now, what I find interesting about this is that they've ended up in a position where they have lots of equities in various companies, but they've also got the huge upside from high-grade deposits in the Athabasca Basin. Now, if you've been watching our channel, you've probably noticed that we have been doing lots of interviews with various uranium companies and creating uranium-focused content. Well, that's because our audience, you guys, can't seem to get enough of the uranium names. So when I see that data, it tells me that we could be in the early innings of a huge bull market for uranium. So guys, I think Skyharbour is a really interesting company that if you are investing in uranium names, you're going to want to look into. All right, everybody, enjoy the interview. Jordan, thanks so much for joining us today.
Thanks for having me. Looking forward to chatting with you.
So uranium is the hot sector right now in Canada. I know from having recently been at the Vancouver Resource Investment Conference, it seemed like everybody I talked to was looking for a uranium asset. Now, something I love about your story is that you've been a believer, not because it got hot, but you have been involved with Skyharbour. You actually founded the company years ago. And here we're now sitting with uranium prices after being sort of stuck in a tight range there in what the mid 20s ish. Uranium's over $100 a pound, and suddenly you look like a genius after years, I'm sure, of having challenges with raising money or driving investor interest. So tell me what it was like in those early days of starting Skyharbour, where I'm sure that there were challenges that brought you here today.
Yeah, well, we've certainly seen the full spectrum. It's been a bit of a roller coaster ride, having founded and started the company with our team here in Vancouver and in Saskatoon, and now a couple team members in Toronto as well. In 2013, we had just the group that I work with here in Vancouver. My chairman Jim Pettit just sold a gold company called Bayfield Ventures to a gold mining company called New Gold. They're now producing at what's called the Rainy River Mine. And so we had success with exploration discovery and the sale of that company. And at the time, Skyharbour was just a shell, a vehicle. I came in to run it, teamed up with a group of geologists out of Saskatoon. And as you may recall, in 2013, a couple of years after Fukushima, uranium prices had obviously more or less cratered and trading, well below at the time, it was $30 to $40 on their way down to sub 20. But that was the opportunity that we saw to go in and basically start building up a project portfolio in the top uranium district, highest grade depository, which is in northern Saskatchewan, the Athabasca Basin, and essentially buy and acquire these projects for pennies on the dollar. And we were able to do that very effectively for a number of years as the uranium market continued to kind of tread along the bottom of the range there, and $20 to $30 a pound uranium. We finally started to see some supply discipline and production cuts, and the market rebalance where the supply side was growing in part to Kazakhstan ramping up from basically 0 pounds a year in 2000 right up to 50 to 60 million pounds where we're at today. And we can talk a bit more about that and their numbers going forward. But, there was an oversupplied market essentially for the better part of the 2010s. And then we, in the later part of the decade, started to see this rebalancing happen. We started to see supply cuts. We started to see, secondary supplies dwindle. And finally, a few years ago, we really just kind of saw the sentiment around nuclear energy and as a result, uranium start to improve. This kind of resurgence that we're seeing. We've continued to see a strain on the supply side. And so over the last few years, finally, the thesis that we had a decade ago is, really kind of playing out very nicely and as we were hoping it would. So, looking back at it, yeah, a completely different market, 8 to 10 years ago. But it afforded us the opportunity to go out and acquire these projects. And we've now built what is the third largest by acreage mineral tenure holding in northern Saskatchewan. So that's well over 1.2 million acres across 25 uranium projects that we have now in our portfolio. Again, having built this up over a decade, and really our focus has shifted from we're continuing to make acquisitions and add to the portfolio, but our focus now in the last several years has shifted more to focused exploration and drilling at our two main projects, which are two advanced stage exploration assets called Russell and Moore Lake. They're adjacent to each other. They represent basically most of the acreage or ground between the richest uranium mine in the world, the McArthur River Mine, the Key Lake Mill, which processes the ore from McArthur. And then to the west of those projects is a development project called Wheeler River, which is owned and operated by our largest shareholder, Denison Mines. Their president and CEO is on our board. And so we're very much now focused on advancing those, making new discoveries, expanding existing uranium deposits and resources, as we do have a number of projects that do host small uranium deposits. But of those 25 projects, those two are the focus. The other 22, 23 projects that we have in our portfolio are a part of our prospect generator business. And we can talk a bit more about that, but we have this dual prong strategy of working our two main assets and then looking to farm out or option JV out these secondary and tertiary projects. And so we've signed option agreements with 8 different partner companies across 8 of these other projects, representing potentially upwards of 80 million in combined project consideration. So that's exploration funding, cash and share payments coming in from these partner companies, assume that they complete their earn-in. So it's not just the projects that and the asset portfolio that we've built up. It's also the business plan, the model, the strategy, this dual-pronged exploration strategy and prospect generation strategy that we employ. And I think that really creates a good one-stop shop, if you will, for investors to get high-grade uranium discovery potential in the Athabasca Basin across numerous assets.
So let's talk about the sort of prospect or project generator portion of the company. I'm sure right now your phone's ringing off the hook with companies that are interested in, they were a lithium company or a gold company or a cobalt company or something like that. And they're not able to get a whole lot of shareholder interest. So they're saying, okay, well, we have to move something forward here. Let's get into uranium because it's really hot. How do you evaluate who you want to work with when somebody picks up the phone and calls you to ask you about optioning one of your projects?
Yeah, well, it's a great question, and yeah, needless to say, given the market right now, we are getting a lot of inbound interest, and we've got, as I mentioned, of the 25 projects, 8 have been optioned or are under JV now. 2 that we're working. So, we've got 15 projects that we own 100% of that we're actively seeking partners on. And yes, we're getting a number of companies that are looking to pivot into uranium, some existing uranium exploration companies looking to expand their portfolio. So, we do, first things first, we do vet the companies as much as we can. Obviously, a big part of, what we do as a prospect generator is, basically package these properties up for a company to come in and then ultimately advance it, take the reins and advance the project, hopefully through a new discovery. And we benefit with an equity position in that company, as well as typically a minority interest, retained interest in the project. Sometimes we'll also keep an NSR on the property. So we do try to retain some upside through that. But we want to make sure the company can raise money. It's funded. It can go out and source capital, because a big part of the success of the prospect generator business revolves around these companies funding the exploration, carrying out the work. We also get cash and share payments on an annual basis from these partner companies as well. So obviously, as a shareholder of these companies, we want to make sure they're run by capable management teams that can raise the money. We want to also make sure that they have a geological team that we can work with. It's typically quite a collaborative process whereby the geologist, the partner company, works with our geologists who, our geological team has been looking for uranium, making discoveries in the basin for many, many decades. So we work collaboratively with our partner companies. And so there's a checklist that we go through. And certainly now we are getting a lot more inbound interest, which we're hoping that we can execute on this, continue to execute on this part of the business, whereby we're bringing in new partners, new strategic partner companies to fund the exploration at these projects, earn in a majority as the operator, and then ultimately run with the project thereafter, with us as a minority interest holder in the project and a large shareholder in the company. And it really does provide us and our shareholders with multiple irons in the fire. So you're not just getting exposure to our main focus, which is Russell and Moore, that we're just started. We just started an 8,000 meter fully funded, fully permitted winter program that we're carrying out exclusively Skyharbour. But you're also getting exposure to a handful of other exploration and drill programs funded by these partner companies. So if any one of these is successful in yielding a new high-grade uranium discovery in the basin, which again, can be multiple multi-billion-dollar discoveries, as I'm sure you've had other Athabasca Basin companies on. These are massive, very high-grade deposits that are very, very rich. And so if they're successful in making a discovery, they're not $100 or $200 million discoveries. They're potentially multi-billion, right? So it's bottom line is we do vet the companies. We want to obviously work with good partner companies. We've got 8 current partners, 2 of which are now joint ventures. One of those is worth noting, Uranium, which is France's largest nuclear and uranium mining company. They've been a JV partner now since 2021, having signed an option agreement and earned in at what's called the Preston Project back in 2017. We first partnered up with them. So that's a strategic partner of ours, in addition to Denison and also Rio Tinto, as Rio's a large shareholder of Skyharbor now, through a property transaction we did with them a year and a half ago. So we've got Urano as a JV partner at Preston, and Azincourt Energy as a JV partner at the East Preston project. Both of those companies are planning work programs in the coming months. And then we've got 5 active earn-in option partners at various other properties. And of those 5, we're expecting exploration programs, drill programs from at least 3, maybe 4 of them this year, as they continue to earn in their interest at those other projects.
And it's not always such a bad thing as a prospect generator if these companies aren't successful, but they're sort of half successful, because then you get your project back and there's been work done on it, right?
Yeah, absolutely. And we so far so good. We're likely going to be announcing the third JV formation here in the next week or 2 with Valor Resources, as they've completed their exploration expenditure requirements, have to make a final cash and share payment to Skyharbor. So that'll be our third formal JV. But yeah, you're absolutely right. Look, it's not the end of the world if the option partners do not complete the earn-ins, because they've likely spent some money at the project, which in Saskatchewan, the way the mineral claims work is you have to fund exploration to keep the claims in good standing. It's great to have this big, vast project portfolio, lots of claims, lots of acreage, but at $15 per hectare per year in exploration expenditure requirements, unless the project had a ton of previous exploration, lots of assessment credit banked up, it's a lot of money to keep these claims in good standing. So having these partner companies come in and do that is just yet another benefit of this prospect generator business.
It still feels like, when we look at how aggressively the price of uranium's gone up, it still feels to me like we haven't seen that much capital flow into the equity names. And I say that in saying that right now, none of our content travels like uranium content. There's huge interest on FinTwit, on the message boards, social media. There's definitely an underbelly of retail investors that are really excited about uranium right now. But it feels like if uranium sustains here over $100, there's still plenty of time for retail investors to get in.
Yeah, I agree. I think, you've seen that chart that shows the phases or stages of a bull market. And I think we're in that media attention phase, which is still relatively early in the bull market. We're nowhere near, I think, the peak. And so, yes, we are seeing this increase, this renewed interest in the sector from, retail and institutional investors. But I can just from looking at Skyharbor in the last 5 or 6 years, and how we've raised money and the kind of the investor interest that we see of very much a microcosm, I'd say, of the sector is, we're a smaller company in the space, but we've seen a lot of kind of new institutional interest. I'd say we haven't yet seen like a major kind of retail flurry of buying in euphoria that is typical of the kind of later stages of a bull market. And if you look at a good kind of metric to look at is the relative performance of the smaller cap names to Cameco and some of the larger producers and larger cap names. So if you look at, let's just take the previous bull market, for example, 03 to 07, right? And if you look at the relative performance of Cameco from basically mid 03 to March 07, when uranium traded north of $135 a pound in the spot market. So call it approximately $200 in today's prices. We're, half of that at just over 100 here currently. The Cameco price performance from basically mid 2003 to March 07, Cameco, I believe, was up something like 800% in that time period. But if you go back about 8 or 9 months to the summer of 2006, Cameco was up about 650% from 03. And the juniors, the lower 50% of market cap companies in the sector, at that point, were only up, I believe, something around 450% since the 03 lows. Now, in that 8 to 10 month period, as the market spiked up to 136, the uranium price spiked up to $136 a pound, the juniors ran from about 450% to 1,200%. So a massive outperformance. Cameco ended up about 800%. And if you look at the period we're in currently, from, let's use March 2020 when the market tanked at COVID, right? Let's use that as the bottom. So Cameco's up a whopping 455, almost 500%. The juniors are they're at about 200, just over 200%. So I think that's a good proxy as to where we're at in the cycle. I think it's still relatively early in the bull market. The smaller and mid cap names always outperform, typically towards the latter stages of the bull market. And I think that is yet to come. And I think we will start to see this relative outperformance play out this year with the smaller and mid cap names in the space as this capital, whether it's institutional, retail, you name it, it maybe made money in the Camecos and some of the larger caps, and that starts to flow down into the juniors, or as more money comes in and that new capital is looking for increased torque or leverage, and they're looking at some smaller and mid cap opportunities.
I was chatting yesterday with a friend who said that he was chatting with a couple of equity analysts at Schedule 1 banks where, they help direct where some of the big flows are going into. And the feedback he was getting is that they're really doing their homework on uranium right now. And this, if the price persists or moves upwards, we could start to see some pretty big capital start to flow in here in the relatively short term. Are you hearing things like that when you chat with institutional investors?
Yeah, no, very, very much so. And getting back to, again, the capital that we've raised, Skyharbor's raised in the last few years, most of the money that we've raised, it's been institutional and institutional money coming in and financings, albeit, mostly from funds and institutional investors that, have been kind of aware of this sector for a little while. We're really now just starting to see kind of the new generalist money come into the space. And it's interesting, like we haven't had to raise, the other part of it is we haven't had to raise a hard dollar in equity financing since August of 2020. Part of that is because of this prospect generator business bringing in, cash on an annual basis. We've also had some warrants exercised, but the money that has come in for flow through and charity flow through, back-end charity flow through financings, it very much has been kind of mostly institutional. We're seeing it now, in the open market over the last several years. The liquidity's improved. We're in all of the major uranium mining ETFs, so we see the capital flows in those ETFs. And again, I think we're really kind of just starting to see this new generalist capital. I've seen that over the last year too, where we're getting inbounds from funds and investors that have been doing their due diligence, their research on this sector, maybe have a position in the larger cap, more liquid names, and are now starting to look, upstream a little bit at some of the smaller and mid cap names. So I think that trend will continue. And look, as I said, I think we're still in the earlier days of this bull market. A lot of people are looking at the uranium price having doubled in the last year, going, how much more is left? But I urge people to really get to understand the fundamentals for this commodity. I mean, you've got a major structural supply deficit. Call it 190 to 200 million pounds of annual demand. We're only producing 155 to 160 million pounds a year. So you've got 35 to 45 million pound structural supply deficit estimated for this year. That's just growing. You do not have the abundance of secondary supplies to fill that gap anymore. We've seen those secondary supplies dwindle over the course of the last 7 to 8 years. We're seeing supply disruptions, whether it's from or downgrades from Kazatomprom and some other producers, having material impacts on the market. And we're just seeing this again nuclear renaissance as the world works to decarbonize. We've got 28 countries now that have signed that COP28 pledge to triple nuclear capacity by 2050. We have the advent of small modular reactors coming online. We have, one that is kind of interesting now to talk about, certainly topical, is artificial intelligence, AI. This consumes a lot of electricity, and we're already seeing companies like Microsoft sign agreements with big utility companies like Constellation to provide zero emission, carbon emission nuclear electricity to power these data centers, which ultimately power industries like AI. So, these new sources of demand aren't going, and they're just increasing. And nuclear energy, it's the only source of emissions-free baseload, 24/7, reliable, scalable, affordable electricity generation.
Wow, lot to chew on there. Getting back to Skyharbor, how do you guys decide which projects that you want to dig in on and say, okay, we want this to be a Skyharbor flagship project, and which ones this makes sense for us to hand over to somebody else?
Yeah, it's a great question. And as I mentioned earlier, we've got our two main co-flagship Russell and Moore Lake projects. Again, these are very strategic assets in the Athabasca Basin. Again, given they're basically most of the ground between the richest uranium mine in the world and the one of two operating mills in the region. The road that services the McArthur River mine runs right up through our Russell Lake project. So we've got road, we've got power, we've also got an exploration camp. This project, we're optioning from Rio Tinto. So we have an option to earn up to 100% of it. It's brought Rio Tinto in as a large shareholder of Skyharbor, a big endorsement, needless to say, for a smaller cap company like ours. And so, the strategic location of both Russell and Moore, they're adjacent to each other, is one of the reasons that we're actively advancing both of these projects. As I mentioned, we've got an 8,000 meter drill program that we've just commenced, 5,000 of that at Russell, 3,000 meters at Moore Lake. The other part of it is the stage of exploration they're at. So both of these projects have had lots of historical work. Moore Lake is the more advanced of the two in terms of the stage of exploration. It actually does host a small high-grade deposit at what's called the Maverick Zone, several high-grade lenses of uranium mineralization. We drilled there in 2017 and announced the highest grade intercept at Moore Lake at 21% U3O8 over a meter and a half. That was within 6% U3O8 over 6 meters. So those are world-class high-grade drill intercepts. So we're working currently on a resource estimate at this Maverick deposit. It'll be out later this year. And we've also got a 3,000 meter drill program that'll be further expanding that high-grade zone at the Maverick deposit at Moore Lake. So that's all coming up at the two main projects. And so, having those projects be at I'd say a little more advanced stage exploration, they're discovery ready, and/or we're expanding known resources. That allows us to go in and justify spending our dollars at those projects currently. Now, it's not to say that these other, couple dozen projects aren't geologically prospective. That's not the case at all. It's just in a lot of cases, some of them are a little earlier stage, right? They haven't had yet quite the amount of previous drilling or exploration. So there's a lot more kind of reconnaissance work and field work that needs to go into the projects. Some of those projects we've optioned to partner companies. Some we're actively seeking partners on. We've got a number of other projects that are drill ready, that are permitted. One project in particular that we've recently optioned to a company called Tisdale does host a uranium deposit near surface, lower grade, but shallow. And they're going in with an initial drill program here in the next month or two to expand that resource. So, there's a rigorous process that we run through, but we're really very much now focused on, at least currently, on the two main projects, Russell and Moore. This initial winter program of 8,000 meters. We'll follow that up with another 10 to 12,000 meters this summer and fall. We're fully funded and permitted for that. And then the other projects, again, there's 8 that are either JV'd out or optioned out, and another 14, 15 projects that we're actively seeking option or JV partners on.
So it sounds like there's massive optionality as we enter what appears to be a great environment for uranium equities, knock on wood. And so the last question I have for you here, you got some drills on the ground this summer. You're fully funded. If I'm an investor and I'm watching the story, what am I looking out for in 2024? How do I evaluate if management has had a successful year? If I'm a shareholder, I'm doing my due diligence. I'm trying to figure out what I expect from the company. What does 2024 look like?
Yeah, well, look, it's going to be our most catalyst-rich year yet as a company. So we'll start with the big one, 8,000 meters. That's just started at Russell and Moore. So a new discovery at Russell Lake would be massive. That would probably be, I'd say, the best case scenario for all the different things that can happen this year. A new high-grade discovery at Russell Lake. There's mineralization widespread across the project, but we're looking to go in there and with this program, hopefully announce a major new high-grade discovery. Again, this project and where we're drilling, the main target areas are just several kilometers away from Denison's Wheeler River project. Development project on the eastern side of the basin. So that would be one. At Moore Lake, continued resource expansion at the Maverick deposit, a resource estimate at this deposit. And we are going to be continuing to do some exploratory drilling elsewhere at the project. So a new discovery elsewhere at the property at Moore Lake would also be a very successful outcome for this upcoming drilling. Same goes for the summer, and I'm just talking the winter program there, the summer and fall programs. Like I said, we're fully funded to continue drilling right through this year at both of those projects. And then when we look at the partner companies, again, as you said, there's a lot of optionality value here with this prospect generator business with 8 partners now. Again, expecting 5 or 6 of those partners to be either drilling or carrying out exploration this year that they have to fund the bulk of. So success with any one of those is beneficial for us and our shareholders. Keep an eye out as well for additional new partners coming in. As we talked about, we're getting a lot of inbound interest from companies that are looking to get positioned in the Athabasca Basin. We have a lot of project inventory that we're looking to option or JV out. And last but not least, look, this is kind of out of our control, but it's important, needless to say, this rising tide that we're seeing with the uranium market. I think that this is going to also spark additional M&A in the sector. We have seen some major deals announced just even in the last year and a half. And there aren't that many companies that are in this, call it $50 million to $500 million market cap vertical, if you will, in the Athabasca Basin. We're one of just a couple. And so from an M&A perspective, it's an interesting thing going forward when you don't really, yes, there's more junior companies, micro caps that have come into the basin over the last few years, but there really haven't been that many more, call it larger exploration companies or more advanced stage exploration companies that have come into the fold in recent years. So I think you will see more consolidation, which is potentially very exciting for us and our shareholders. as we see this market continue to move higher.
Well, Jordan, thanks so much for hopping on here. Skyharbor is a name that we're going to keep an eye on. I think you guys have lots of exciting stuff going on for what appears to be a heck of a bull run. I also am of the belief that we're in the early innings of this. So hopefully you'll come back on here in the future and continue to update us, because there's a lot happening with Skyharbor and there's a lot to talk about.
Yeah, no, absolutely. I'd love to come back on and yeah, it's definitely something that, investors should have on their radar screens this year. I think, we're again, still relatively early on. There's a lot of runway, I think, left, but it is starting to get this attention, this media attention. We're starting to see the generalist capital and capital flows come into the space, and it's going to be a very exciting year or two, I think, at least for not just Skyharbor, but the sector as a whole.
Awesome. Thanks so much for hopping on, Jordan.
Thank you.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.